Did you know that nearly 15 billion dirhams worth of mortgages were issued in the UAE in the first quarter of 2025? Everyone is talking about Dubai property, but nobody's diving deep into explaining how all this financing actually works. And I've seen clients losing thousands of dollars simply because they didn't understand how all these mortgages work over here. And one client almost lost his dream villa in Palm Jumeirah because he waited until the last minute to arrange his financing. And get this, most people don't even realize you can still get a mortgage as a non-resident even if you have never set a foot in Dubai. And of course, banks won't tell you about the shortcuts for any obvious reason. They're making millions from uninformed buyers. And that's exactly why today I'm pulling back the curtain on everything you need to know about the UAE mortgages. Whether you're a resident or non-resident or thinking about moving money here, this could save you hundreds of thousands of dirhams and weeks of stress. Stay with me because I'll prove to you that your life can get easier or way easier when it comes to Dubai mortgages. Hi, I'm Zack from Emifast, and we help entrepreneurs maximize their income, minimize taxes with smart global relocation strategies. Visit our website to explore our resources or to get in touch with one of our consultants. We're always happy to help. You know what? Most property videos just show you the shiny buildings, the infinity pools, but they skip the part how to actually pay for it all. The mortgage market in Dubai is completely different from what you're used back home. Different rules, different requirements, and definitely different interest rates. What I'm about to share comes from seeing countless real estate deals go through, both successes and disasters. So let's break down what nobody else is telling you about getting a mortgage in Dubai in 2025. First thing you need to understand, there is a massive difference between resident and non-resident financing in the UAE. So if you're already living here with a valid UAE visa, banks will finance up to 80% of your property under 5 million dirhams. That means you're putting down only 20% as a deposit. For properties over 5 million, the maximum drops to 70%. But here's what most people get wrong. Having a UAE visa doesn't automatically qualify you for resident financing. The bank doesn't care about your visa status, they care about where your income is coming from. Let me explain this point because it's crucial. So if you have a golden visa, but your income is still generated in the UK, guess what? You're still treated as a non-resident by banks. So I've seen so many people get this wrong. For non-residents, the maximum financing drops to 60%. Some banks might switch to 70% for exceptional cases, but don't count on it. And as interest rates, expect to pay 1 to 1.5% more than residents. But there is a workaround. Most agents won't tell you about it. So if you're planning to move to Dubai, don't wait until you're physically here to apply for financing. Start the process already 6 months in advance. That way, when you become a resident, you will have everything ready to go and potentially save hundreds of thousands in down payments. So what do banks really look at when deciding whether to give you a mortgage? For resident salaried employees, it's pretty straightforward. So you need a minimum salary of 10,000 dirhams shown consistently on your bank account for at least 6 months. With this salary, you can borrow up to 720 dirhams. So why exactly 720? Because there is a UAE central bank rule that you can borrow more than 7 times your annual income. For non-residents, it gets more interesting. So banks generally look at 3 things. So first, if you're employees, they want to see your salary statements, credit reports from your home country, tax documents to verify you actually take home pay. Second, if you're self-employed, they need to see your company documents, bank statements, credit reports, and audit reports as well. And third, this is the clever one, some banks will actually look at the cash balance in your personal accounts. So not the fixed deposit or investments, just the cash sitting on your current or savings account. If you have significant balances, they can use to determine if you're eligible or not. And this is perfect for these business owners who will not have a large monthly salary, but still keep substantial cash in their accounts. Just make sure to plan this 6 months ahead by maintaining those balances consistently. One client of mine was declined 3 times for financing because he kept most of his money in company accounts rather than his personal accounts. Now, we restructured where he kept his cash and problem solved. He got a mortgage within a week. And you see, like I told you, these are the details nobody wants to tell you about until it's too late. Now let's talk about the cost that nobody mentions until halfway through the process. So until recently, banks would finance just the property, or not only the property value, but also the 4% DLD and a 2% agency commission. And that's not the case anymore. The central bank has changed the rules and now you need to cover this cost out of your pocket. And what does it mean in practice? So for a 1 million dirham property, you're not just paying the 20% down payment, which is 200,000 dirhams. You also need to come up with another 60,000 for fees and commission. That's 260 dirhams in front rather than the 200s. Then there's a life insurance, and it's mandatory for almost every mortgage in the UAE. The good news is that the cost is pretty low, but unless you have pre-existing medical conditions. But still, there's another cost to factor in. And remember, if you're non-resident, you will have to fly to Dubai at least once during the process. The bank requires you to sign loan documents in person and need to be physically present to open your account. So there's no way around this. Don't let anybody tell you otherwise. I've seen clients, they use POAs for everything before, but because they didn't know that banks won't accept it for loan documents. But let me give you a cost-saving tip, because I expect that the banks won't tell you. If you're buying from a developer on a payment plan, don't wait until hand over to arrange your mortgage. Again, start 6 months earlier than a completion date, as this will give you the time to shop around for the best rates, prepare all your documents, and avoid any last-minute rush fees. One of my clients was very happy to save 70,000 dirham just by starting the process early and avoiding express processing fees that the bank charges when you're really in a hurry. Now, let's talk about interest rate. As of May 2025, the lowest rate you can get in the UAE is around 3.99 for residents, and some banks advertise 3.75. But we know better. Here's a catch: those banks typically have massive backlogs and take up to 2 months just for pre-approval. While for non-residents, they add at least 1% to whatever resident rate is. So you are looking at a minimum of 4.99 interest rate. But here's what you need to know about the UAE mortgages that makes the difference from many other countries. They're incredibly flexible when it comes to selling or refinancing. So the maximum penalty for early settlements is just 1% of the outstanding loan amount, and it's kept at 10,000 dirhams. So that means that even if you have a 20 million dirham loan, your maximum penalty for paying it off early is just 10,000 dirham, and that's almost nothing. And this makes the UAE mortgages perfect for property investors who might want to flip their properties quickly when market values increase. In many other countries, early repayment penalties can be more painful, sometimes 2% or 5% of the loan with no cap. I've had clients use this to their advantage by buying properties, waiting for values to increase, and then selling it out of profit. Because the early settlement fee is so low, it barely impacts their return. And this flexibility in the UAE helps property investors make quick profits without punishing them for mere market mechanisms. Now let's talk about one of my favorite strategies, the equity release. This is perfect if you already own property in Dubai and want to leverage to buy more. And here's how it works. If your property has increased in value, which many Dubai properties have over the last few years, you can refinance it and pull out 80% of its current value for non-residents and 60% for non-residents. And here's the critical detail: this money can only be used to buy another property, so the bank won't let you use it for any other purpose. So I've seen this strategy work incredibly well. So one of the clients bought a villa for 7 million dirhams. A year later, its values increased to 12 million dirhams. He refinanced it, pulled out a 5 million in equity, and used it as a down payment on another property. 2 years later, the first property was worth 22 million, so he refinanced again and bought a third property. So do you see the profitable virtuous cycle? That's how the wealth is built here in real estate and here in the UAE. Not just through property appreciation, but by using the appreciation to expand your portfolio without spending more of your own money. This works particularly well with villas and townhouses, which have seen massive appreciation compared to apartments. Places like Arabian Ranches, the Meadows, Jumeirah Islands have been gold mines for a lot of property investors using this strategy. One question I get all the time from clients is, should I go directly to the bank or can I use a mortgage broker? Now let me be completely clear here, you'd be crazy to go directly to a bank in Dubai. And here's why. When you go to a single bank, you're limited to whatever products they offer. So maybe their interest rates are higher, or their approval process is slow, or they have specific requirements that don't match your situation. And that's precisely why you need to have a mortgage broker. A good mortgage broker has relationship with all the banks in the UAE. So he can look at your specific situation and immediately tell you which bank are most likely to approve your application, which ones would offer you the best interest rates, and which one will process your application faster. And even better, using a broker doesn't cost you anything in most cases, because they are paid by the bank and not by you. I've seen cases where one bank offered a client a maximum loan of 1.5 million dirhams, while another bank was willing to go up to 2.2 million dirhams for the same client. That's really a 700,000 dirham difference. And the only way to know this is by having someone who knows how it works with all those different banks. The processing time is the other deciding factor. So someone's bank takes 1 day for pre-approval, the other one takes 2 weeks. So if you're in a hurry, just choosing the wrong bank could be a financial disaster. So there you have it, a real insider guide to the UAE mortgages in 2025. So whether you're a resident or a non-resident or planning to move here, understanding these details can really save you hundreds of thousands of dirhams of avoidable extra costs and weeks of needless stress. To sum it all up, I will leave you with some key points. First of all, start a mortgage process 6 months before you need the money. Understand that your visa doesn't determine your mortgage eligibility, but your income source does. Keep significant balances in your personal account, not just a company account. Use equity release to expand your portfolio without additional capital input. And most importantly, always use a mortgage broker instead of going directly to the bank. So if you found this video helpful, please hit that like button and subscribe for more insight on properties, taxes, strategies, and wealth building. And if you have any question, I will reply on all of them. See you in the next video.